It's 6 o'clock in London, it's 1 p.m. in New York, it's 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, 10:30 at night in Mumbai. And right now, it's a glorious 1 p.m. in the Caribbean, where unfortunately we've got a temporary dog shelter has just been set up right beside where has been the ideal place to have a recording for the course of the last week. Ladies and gentlemen, IPO-VID Series 11, Episode 3, that's number 63 in total, starts here. First, let's say hello to the good folks of The Spectator magazine. They've published an eye-watering table with data about the Ukraine war. There's a lot of damage just to military vehicles before we factor in the eye-popping cost of rebuilding Ukraine. However, this conflict may ultimately fan out. Meanwhile, sadly, the world of exchanges is a smaller place this week. Last week, we lost Brian Taylor, a market maven, an exchange guru, and a gentleman. Our condolences to his wife, Helen. We have lost a great man from the passage of exchanges who worked with more than 130 different financial institutions during the course of an epic career, including spells as chief executive of Plus, chief executive of the Bahamas International Securities Exchange, BISEX, which he helped set up, and many, many other things besides. Absolutely, our parish of exchanges is a much smaller place this week. Rest in peace, Brian Taylor. Moving on from that to slightly happier news, we have the reappearance of Lance Ugla. Delighted to see that Lance Ugla, well, I thought he might go on an entrepreneurial bent, having sold out of IHS Markit, but surprisingly, he's going green. Like so many other people, he's going to be CEO of Beyond Net Zero, which is a company funded by General Atlantic. Finally, this week, ladies and gentlemen, all the very best to the LME at the time of upheaval. Good luck to Matt Chamberlain. He's stepping down this week, and all the very, very best to Adrian Farnham, who's going to be in as the new interim chief executive officer while the LME looks for Matt's replacement. All this and more, of course, has been covered in greater detail in Exchange Invest Daily, the unique newsletter of the Bourse Business. Send us an email or hit me up, Patrick L. Young, on social media via whatever means you're watching this live stream. Don't forget to give us a little bit of love or even a certain remark about jealousy. Thank you very, very much, by the way, to Christopher Messina. I see you've already made an excellent intervention so far today while we were having a few problems with our live camera action here in the Caribbean. I don't believe you have to be stoned in order to be watching this particular segment, but there is, of course, a relationship as we're discussing the world of markets and exchanges from SMEs to Cannabis Power Player. Our guest today, as CEO of the Canadian Securities Exchange since July 2011, Richard Carleton has positioned the exchange to take a leading role in the provision of public capital to entrepreneurial companies. Since 2014, the CSE has set a number of records for new listings, capital raised by issuers, and trading turnover in the competitive Canadian marketplace. As an early advocate for the cannabis industry, CSE is the global exchange leader in the sector. And Financial Post magazine recognized Richard as one of Canada's 25 cannabis industry power players. Presumably that was more standing up rather than sitting down. We'll get to that in just a moment. Richard, it's a joy to see you. We're both somewhere in and around North America. You're a bit further north than I am. I'm going to use my masculine intuition to guess, but tell us, where in the world are you today?
Yes, I'm coming to you this afternoon from high above the corners of Bay and King Street in downtown Toronto, roughly 720 feet above the teeming masses down below, and CSE World Headquarters here in Toronto. We also have an office in Vancouver and representation in Montreal and Calgary as well. And we also spend, of course, a good deal of time on airplanes reaching out to companies outside of Canada and have had some tremendous success in Australia, South Asia, Europe, Africa, and recently in particular in the Middle East.
So give us a little bit of a background, actually, to the Canadian Securities Exchange. Tell us about its formation and how you got there.
Well, it's a kind of a common story. We've seen a number of exchanges try to establish themselves in Canada, the United States, UK, and Australia to try to do a better job than I guess who I'll politely refer to as the incumbent exchanges in each of these markets. And so there was a group of individuals, many of whom were alum of the Toronto Stock Exchange, myself included, that looked at an opportunity in the early aughts to raise some capital and to look at providing, I guess, a lower cost and in particular, lower cost of capital for early stage companies coming into the public markets. And one of the distinct features of the Canadian capital market is we have a much less well-developed private equity world in Canada and a much more heavily developed what we call public venture capital. And so clearly we have the venture exchange, which has about 2,000 issuers or thereabouts, Toronto Stock Exchange, another 12 to 1,400 or thereabouts. And we're currently coming in at about 800 companies. I expect by this time next year we'll be probably over the 1,000 mark at the rate that people are coming on side. So Canada really does punch above its weight in the public company market with more than 4,000 publicly listed and traded companies at this point. So we pulled together a team, got some technology in the door from our friends at much lamented late company EFA, and built a small team. It was a hard build. And I think, again, we've seen this over and over again with different organizations, as I mentioned, in the UK, Australia, and the United States. To convince the first few companies is really hard. The next set of companies is still pretty hard, and we were. It was really a good 10 years before we had the opportunity to begin to move towards cash flow positivity, to assure the marketplace that in fact we had sufficient resources to survive in the long term. And it's a real tribute to our team members and particularly our shareholders who had the patience to stay with us while we built up the market.
Very interesting. So just give us a quick rundown. I mean, who are actually the major backers of your exchanges? Because there are no other major exchanges who are backing it, right?
Yeah, that's correct. It's a matter of public record. I mean, we're obviously still a private company, but our principal shareholder is Urbana Corporation. Tom Caldwell is the chairman. And Tom, of course, built a tremendous reputation over the last 25 years in the exchange space by being astute enough in many cases to purchase seats on the exchanges before they demutualized. And when they did demutualize, but were private companies with share capital, to acquire as much of the shareholding as the rules would allow him and his co-investors. And of course, they had a number of very, very successful trades, whether it was with the old Vancouver Stock Exchange here in Canada, the New York Stock Exchange, the Chicago Board of Trade, a number of properties around the world. They profited by the tremendous increase in valuations of the public exchanges.
Very interesting. Yes, Tom Caldwell, quite the man who was a very, very early adopter of going for-profit capitalism when we saw the demutualization of exchanges, backing you and obviously your chairman. Let me just say hello to a vast swathe of our regular viewers here who've tuned in, and it's a joy to see you all this evening. I do believe we've got messages coming from, amongst others, he says waiting for it to appear on his screen. We've obviously got a few seconds delay today. Les Calvert, good evening all. Yes, hello Les, lovely to see you too. Hope all is well with you this evening. Hello, Chris Messina. It's lovely to see you too. I was noting you were talking earlier on. Good evening, all. Yes, that is a rather stunning background. I'm sorry, we've just had a camera failure, which is why we were a couple of minutes late there, Peter. Otherwise, you'd be able to see me more clearly. But actually, I think probably the background looks an awful lot better. Interestingly, I've also got a wild dog just over this shoulder, and I've got a donkey just out of picture to the right-hand side, which makes something that you don't see every day in Bay Street, for example, I would imagine. And hello,
well,
Simon
no comment.
No comment whatsoever. Yes, no, absolutely. Well, I think the joke around here, we're in Grand Turk in the Turks and Caicos Islands, which is the administrative capital. And as I was saying to somebody in Washington, D.C. the other day, it's incredible. They've got donkeys roaming the streets. And he was saying, you think that's unique? But anyway, leaving aside such jokes, and we won't get as far as Ottawa. Hello, Simon Huckle. Great to see you too. Thank you very much for tuning in this evening. And hello, Chris Messina of Messy Times. Good to see you all together. So it's taken you quite a while to build this market. And you're really talking about the better part of 10 years to manage to see profit, to manage to develop things. What are the sort of key lessons that you learned on the way through, Richard?
Well, the first one is maybe if I had to do all over again, I might not have. But in retrospect, obviously, it's been tremendously rewarding as, we did achieve that point where, as we mentioned, the rock started rolling down the hill. But, again, there's no secret sauce. It really is a question of establishing your reputation, not just obviously with the issuer community, but there's so many different folks that you have to develop these positive working relationships with. The regulators, clearly, they have to be satisfied that you're in a position to meet the gatekeeper requirements that are imposed on stock exchanges in Canada, the United States, UK, and so on. But also to have the appropriate working relationships with the legal profession, the accounting profession locally. Obviously, the investment bankers are a tremendous source of potential deal flow for the exchanges. And of course, last but not least, and incredibly important, is building that reputation with the investor population, which of course itself is diverse and in some cases very hard to get to. So again, whether it's the retail community, who is obviously a big part of public venture capital in Canada, but also the family offices, the investment funds that support investment in early stage companies. And of course, as they grow up, you need to ensure that institutional investors are in a position to, in fact, invest in companies that are listed on your exchange. So again, it's very, very much patient, wearing out a lot of shoe leather, talking to a lot of people, and establishing that positive reputation in the marketplace, which, as I mentioned, it took a long time. But once we got over the hump, it's been obviously tremendously rewarding for me and the team here at the CSE.
To have 800 listed companies, that's something that a vast number of national stock exchanges can't even claim throughout the world. And you're one of umpteen exchanges in Canada. We actually had your old friend and ours, Josh Schmidt, on just a few months ago talking about his exchange, Neo, in the Canadian marketplace as well. We're talking here from essentially the heart of the Canadian Financial Centre in Toronto. We're speaking with Richard Carleton of CSE. If you've got a question, ping us a question, make a comment, send us some love, ladies and gentlemen. We'd love to hear from you if you've got anything you'd like to add. So, Richard, tell us a little bit about your personal interaction with the exchange, because you've obviously been CEO for quite a while now.
Yeah, I actually started with the exchange effectively as kind of chief operating officer, I guess. I came in to actually oversee the implementation of trading system and related technology from NASDAQ. And that was our attempt to also provide alternative trading platform for securities that trade on the TSX and the Venture Exchange. And we were looking to take advantage of the so-called high frequency trading or short-term liquidity providers, whatever you want to call it, who are beginning to be very active in Canada after successfully disrupting the equity market structure in the United States. So we had something of a technology deficit in Canada at the time. The belief was that by offering a high performance, low latency trading system, that we'd be in a position to support those sorts of activities. We had a certain amount of success with that, but I think by the time everybody did catch up before very long in terms of the technology deficits, whether the incumbent or we obviously, as you pointed out, had competitors come up from the United States, others that were funded locally. So we very quickly went to, I think, something like 13 different trading platforms for Canadian equities at that point. There are, I would say, there's nobody in Canada that would suggest that that is not enough. In fact, quite the opposite. They'd say that's too many. So they were, as I say, the marketplace was very crowded, and I think it's fair to say that the profits quickly got competed out of that particular undertaking. But all along, of course, our focus was on building that the listings business. It's sticky. It has sustaining revenues, and gives rise to many long-term business relationships with the issuer community. And as I say, from an analyst perspective, you really do want to look at the strength of the exchange's listing franchise when evaluating the relative merits of the different businesses that you're looking at.
Yes, I mean, it's fascinating the way that your franchise has developed. So just to give everybody a flavor, I mean, at the moment, you are concentrated fully on equity, or you also do debt issues?
We do some debt. Publicly listed debt is not a terribly popular financing vehicle in Canada, unlike, for instance, in Latin America, where a significant percentage of the listed issues are, in fact, debt instruments. But you'll see some, in particular, convertible debentures that are listed by various companies. But again, our real strength, and I guess this is really what we're coming to, was the opportunity that we had that presented itself in the spring of 2014, when we began to see, or at least rather the Canadian government announced that they were getting out of the cultivation of marijuana for medical purposes, and that they would entertain applications for licenses to cultivate the plant to supply the needs of a growing number of medical patients in Canada who were prescribed cannabis for various ailments. And so the government, I think, expected a small handful of applicants. Instead, they wound up with thousands. And traditional sources of finance were closed to these folks. The bank investment dealers wouldn't take on advisory assignments or fundraising assignments for these folks. Bank debt, mortgages, so on, were not available for these companies. So the only alternative really was for them to raise the capital they needed to build out their grow operations and distribution networks and product development activities were the public capital markets. And so we saw a small number of companies approach us. Supreme Cannabis and Aurora Cannabis were the two first ones. We saw no issue with listing these companies. And within, I think, a few months, by the summer of 2014, we had roughly 30 companies from the space. And there was a real, I almost should say, euphoria amongst the investor community as they saw these companies come in, and there was very heavily traded, and the asset valuations increased quite dramatically out of the gate. This, of course, created that virtuous cycle where we saw more and more companies deciding to take advantage of that. And eventually we are today, I think, roughly 180 companies out of the 800 or so that are directly involved in some way, shape, or form in the cannabis space in Canada, and of course, subsequently from the United States, where most of our large issuers are based, but also from the UK, from Europe, from South Asia and Central America, South America, and of course, Israel, which is an important source of new issuers for us as well.
That's very interesting altogether. So if we're looking at that, actually, well, here's a question. Absolutely perfect question altogether. Spot on timing. Thank you. Our mutual friend, Paul Bowes, from somewhere else around the Toronto City Centre CBD, is writing to us today. A question for Richard. Does there continue to be any challenges to serving US clients in states or jurisdictions that have a less liberal policy towards the cannabis business?
And as a subtly great question, Paul. And that's the last nice thing I'm going to say about you this afternoon. But no, Paul's a wonderful guy, and we worked many years together and had a great deal of fun at the old Toronto Stock Exchange back in the day. But in any event, yeah, there's a lot to unpack here. Institutional investors are finding that their custodians will not custody shares of U.S. plant-touching cannabis companies because of concerns of possible retribution from the banking regulators and so on in the United States. That said, the bulge bracket firms, by and large, will process trades to the Canadian Securities Exchange, as well as the over-the-counter markets where these names trade in the United States as well. So, and again, these companies all have their securities are registered for continuous net settlement with DTCC. So they are fully fungible between the Canadian clearinghouse and the US clearinghouse. So there is, in fact, very little friction when it comes to settling the trades afterwards. But one of the other challenges is that the zero commission brokers that cater to the retail crowd in the United States, and as example, Robinhood, Webull, and eToro, for example, they looked at the sector about 4 or 5 years ago, decided that it was too volatile, too fraught with potential regulatory issues, and have not to date allowed their clients to trade those names over the counter in the US. So that's a considerable source of frustration to the issuers, because they get a lot of phone calls from Robinhood clients wanting to trade the stock, and they're frustrated when they can't. There's some other subtle things, Patrick and Paul, that we're working on, to some bumps in the road that we're looking to clear. So, for example, probably 5 or 6 of the companies that are listed on the CSE are big enough to be in the U.S. small cap indices, which are maintained by MSCI and, of course, one close to Paul's heart, FTSE. And yet, of course, the providers don't have rules for what are potentially quite large U.S. companies, which aren't listed in the U.S. So we're working with those providers, and we hope to provide an avenue for our issuers to gain membership in those indices. I believe our largest Israeli company, IM Cannabis, is also big enough for the Israeli sub-indices as well. So it's not just a U.S. story. And it's 40 to 50 billion in market cap that is represented by these issuers. So it's starting to build up into something that's quite material, that folks who either benchmark themselves or who, in fact, try to replicate the returns from those benchmarks are going to have to take a hard look at investing in the securities of these issuers in order to avoid tracking error against those benchmarks. So yeah, there are still a lot of things that we're continuing to work on, but a lot of goodwill and support from the issuers, and certainly from some of our partners in the index world as well. We see good things ahead for everybody here.
Certainly, it's got to have been rather challenging, to put it mildly, trying to work with the rather schizophrenic approach to legislation of the folks to the south of your borders in Canada over the course of the last 10 years when it comes to cannabis.
Well, in Canada, we have a lot of tolerance and understanding for differences at the federal and the provincial level. And what we're seeing in the United States, of course, is obviously a strong dichotomy between the approach at the federal level as opposed to the individual states level. So, and again, the companies that are succeeding have learned how to operate within the restrictive boundaries that they are. So it's not the end of the world for them if it's status quo, certainly for the remainder of Mr. Biden's term, because it's abundantly clear that he's not prepared to spend any political capital in order to try and get some form of liberalization at the federal level through both houses of Congress. So yeah, I mean, I think again, we're likely looking like we're going to have to continue to deal with the present system for the foreseeable future. Canada presents different challenges for the companies operating here. The major one is that it's abundantly clear that in an adult recreational use jurisdiction, the cannabis industry is essentially a consumer packaged goods undertaking. And it's really difficult when you can't actually engage in sales activities or marketing. And if brands are the most important thing, the most valuable thing that you bring to market, and you can't actually invest in the development of those brands or in actual advertising, it makes it extremely challenging for the consumer who may be interested in different products, different formulations, different delivery modalities. And again, the industry is extremely frustrated because it's a very hard build for them to develop consumer loyalty and to begin to invest in products which have higher margins. So,
which brings us elegantly to actually a comment that we've got a question here that's just come in from Peter Secon. Thank you very much, Paul Bowes, for your question. What additional work, regulatory requirements go to strengthen investor confidence in emerging cannabis companies?
Well, we did a lot of work early on with the regulators on the specific areas of concern on the company's disclosure when they list, and then elements for continuous disclosure or on their annual financial information forms. So, and we very quickly came to an agreement as to the very specific areas of risk that we wanted the companies to address. So that's part of it. The other part of it is, and I think this is unique in the industry now, or at least in the public markets now. The shareholder profile for, say, Curaleaf or Cresco or Trulieve, which are the biggest cannabis issuers listed on the CSE, based in the United States, and again, multiple billions in market capitalization. But it's 95 to 96% held by retail. And without the, I guess, the stabling influence, if you wanted to call that, of the long-term investor, the indexers, the various other folks that would hold a much higher percentage of the shares of a comparable consumer packaged goods company like a Coke or a Pepsi or a beer company or what have you. It does mean that the volatility profile, it tends to be much higher for these companies than I think their appropriate peers. So, and that in and of itself, I think, creates investor confidence issues, because it's one thing when the stock is going up by 10% a week or 15% a week or whatever. It's something, again, when the stocks, in fact, are in a downdraft, which they generally speaking have been for the last little while. Again, people do get discouraged with the valuation profile for these companies is just not going to change, and it's just not going to be properly recognized.
That's quite fascinating altogether. So does the cannabis sector have a very specific, for want of a better term, vibe in the way that it actually performs investment-wise?
Absolutely. There's very little correlation with the broader market. So from that perspective, investors may want to take a look at, whether it's a hedge or what, I'm not sure. I haven't specifically done the variance covariance matrices to see what the right offset is. But COVID, by and large, was very good from a business perspective for these companies. Whether it was the COVID relief payments or the fact that people were staying at home, it was certainly a situation where consumption of legal cannabis grew quite substantially in Canada and the United States. And yet, as I say, we haven't seen a recognition of that in the asset valuations for these companies yet, which is, again, a challenge for the management teams and somewhat unfortunate.
So changing gears slightly, we've got a great deal of questions coming in. Thank you. Keep them coming, ladies and gentlemen. It's fascinating. Here we have Tomasz Kovacic, who's the Chief Executive Officer of Securities Grid. And I do believe that he's in Slovenia, in Ljubljana today. Hi, Patrick and Richard. What's the long-term strategy behind the DLT blockchain settlement system you announced? And congratulations on that, by the way.
Well, thank you. I think there's really a couple of things here. The first one is uh, with the initiative, what we're looking to do is to stimulate the listing of instruments which aren't currently, I guess, economically feasible with the existing trading, clearing and settlement, and in particular, entitlements management technologies that we use or lack thereof. And so the idea here is that by providing a clearing and settlement and entitlements management system for digital securities, whatever you want to call them, tokenized securities, not only do we want to see these companies list instruments that take advantage of the inherent benefits of the blockchain and of smart contracts and all of that, but will also, as I say, stimulate the creation of what are likely to be income-producing securities. And again, let me give you a very specific example. A common means of financing new mine development. So the company's gone, they found a commercial deposit. They now need to raise a couple $100 million to actually put the mine into production. Now, you could issue equity, but of course that's dilutive to the existing shareholders, and that would make them real angry. So instead, what they tend to do is some kind of royalty stream with a small handful of financial institutions and mining companies globally that provide this kind of finance. But it's a very small cartel that provides this kind of finance. And so we think that if these issuers, these companies are able to, in fact, offer these securities to the public, so high quality securities that are guaranteed against physical asset in the ground, which generates a monthly income stream, we think that that would be a very popular investment for retail folks. And we also think that the cost of capital, if you open it up to the public, in fact, will be considerably lower than if you place yourself at the tender mercies of the hedge funds and mining companies that the small handful of them that provide this kind of finance. So that's just an example of what we plan to do. So we're at a stage now where over the course of the summer, we're going to open up to third-party testing. The system is pretty much put together at this point from end to end. We're doing some fine-tuning with the portal that we're providing to the dealers and some of the other folks to provide them with not just visibility onto the chain, but also to provide them with reports that will integrate quite nicely into the existing back office systems they're running. I have to say I got to know a whole bunch more about the plumbing than I ever wanted to, Patrick. But it's important. And there's, I think it's fair to say, a crying need to innovate and to disrupt the back office space with these new products and services.
There's a crying need to innovate in the back office. Yes, I think that's absolutely fair. Now, this is very interesting, though, talking about, I'm going to come to Peter Second's question in a moment. Thank you, Tomasz Kovacic, for your question about the blockchain-related things. You hit on something very interesting there. You're talking about these rights payments. Now, if I remember correctly, there are actually 1 or 2 or 3 already listed Canadian rights payments companies of one kind or another. Did that make it easier, or does that make it easier for you to get regulators to appreciate the dynamics of these sorts of tokens?
I believe so, Patrick, because again, if we're going to, hand in hand with the regulators with an existing framework, right? That not where we're selling fractional interests in a portrait of a gorilla or something,
There's nothing better than a badly pixelated gorilla picture to really excite the average. I'm not really sure what it says about human evolution that so many males under the age of 35 suddenly think it's exciting.
Now, somebody 5 years from now, when we're the global home for gorilla and fractional NFT trading, somebody's going to play that to me and try to embarrass us. But but in all honesty, as I say, going to the regulators with a deal structure that has been pioneered and is extremely well understood in the private equity space, and all we're doing is simply being able to market that same transaction, same underlying structure, same set of guarantees and security aspects. I think is obviously will make it much easier to get the blessing from the regulatory community.
Well, certainly, I think there's 2 points to unpack there, and that is obviously the fact that you, like I, sound to be clearly far too conventional investor, because I looked at the Bored Apes Yacht Club and just thought next before managing to miss out on what was a colossal bull market of something that seemed quite remarkable. And at the same point in time, I think it is very, very interesting, though, what you're talking about, because we've had a lot of conversations about right streams and things like that. And some regulators, I mean, they're quite literally reaching for their tape measures and looking to put you in an orange jumpsuit. And yet in Canada, you've already had these sorts of businesses for many years. And therefore, I think it does create a very interesting opportunity. So your blockchain token platform, just to remind us, you're looking to get that into beta in the near future?
That's correct. Yeah, it's currently in our internal test environment, and as I say, we're just fine-tuning some of the reports that we be provided to different folks on chain. Again, mostly looking at the dealers, but of course also the transfer agents and the payment on our payments partner, and some of the other folks with visibility on chain. The real interesting thing too, Patrick, and again, as I say, I don't want to spend the rest of my life in the back office, but it is important, but there is tremendous potential here too to revolutionize things like shareholder communications and investor relations, proxy voting and solicitation. All of those things, in fact, could be facilitated on the chain, saving tremendous costs and uncertainty. Think also about the visibility on short sales. The regulators have always been concerned, or people have always been pointing fingers at the regulators, saying that they don't have a handle on what the outstanding short position in a particular name is at any given time. Those days are in the past. When we have these transactions on chain, there will be again, for the select few, absolute visibility down to the beneficial ownership layer. As to who's doing what to whom, and what their position is at any given time.
Yeah, I think that's a very, very good point. I mean, the whole possibility for radical organization and actually knowing what is going on at all points in time suddenly becomes very, very exciting. And actually, following on for that, thank you, Peter. I've got another question I know coming up from you in a moment. What new financing developments or trends are you seeing at the moment? Are there any industry sectors, capital sources, or modes of financing that stand out?
And the quick answer there is yes, absolutely. Coming out of COVID, everybody was expecting that there would be I guess we'll call it, shorten the supply chain trade, and whether that meant strategic minerals being delivered from Canada, the United States, as opposed to from China or Russia, or the West Africa, and so forth. That there was a belief that this was going to be a very interesting area of investment. Of course, the war in the Ukraine has only strengthened that theme, as well as of course the Russia sanctions, which remove significant sources of supply into a variety of industries. And then of course at some point we're going to be looking at rebuilding the Ukraine as well. So again, we've seen absolute explosion in all sorts of commodity prices, which have had a very beneficial effect on corporate finance for not just the usual precious metals exploration, which is a never-ending story in Canada, but things like nickel and copper and zinc and the battery metals and the rare earths and so on. These are heady times for the operators of those companies for raising finance to expand the projects. And the interesting thing with in particular the copper and the nickel space, a lot of these projects were drilled in the 70s, 80s, or thereabouts, but because of intervention of the Chinese and the Russians in particular, you've seen a significant downward pressure on the price of these commodities over the last 40 years or so. And now that that pressure is off, we're seeing, as I say, projects that were identified some years ago, I think will be put into production quite quickly. Some of the other themes, which again are also driven by the supply chain and the war, are agricultural technology. It's absolutely imperative that farmers in Canada, the United States, Brazil, Argentina, and parts of Western Europe increase their yields dramatically, and in fact, this year in particular. And there's enormous potential in things like remote sensing, in different seed genetics, in all aspects of basically improving yields in the agricultural sector through application of genetics and high technology. Those companies are also receiving funds and are getting a keen audience from the investment community globally. So we're seeing a lot of that. The psychedelics space is also an interesting one that's been going on for the last couple of years. But suffice to say, Patrick, before people think I'm really lost my mind, there is in fact a quite large body of historical clinical research into the therapeutic benefits for depression, addiction, anxiety, and some other mental disorders, which we seem to be having more of every day. And whether it's LSD, ketamine, psilocybin, which is the active ingredient in mushrooms, and some of the other compounds which people have been using for 5,000 years in different cultures, there's a lot of there that will be explored by companies that are looking to support the creation of treatments and prescription medications. And so we have about 30 companies that are pursuing different angles and different compounds in that space. And as I say, that one will really get me a sideways glance at a cocktail party when people ask me about, what are the strong sectors on the Canadian Securities Exchange. But I can assure you, as I say, that there is some significant therapeutic benefit to be derived. And I think there will be, in particular, a generation of drugs forthcoming. Now, that's the other thing. It's kind of like the mining industry. It's not next week or the week after. It takes years to get through the clinical trial process in Canada and the US. And but there will be at some point in the not too distant future specific treatments based on things that not that long ago people just thought of as party drugs or street drugs.
So, ladies and gentlemen, if you see a man sidle up to your teenage studying children at a cocktail party by the lakes during the course of the summer and he says, not the future is plastics, it's psychedelics, you can rest assured you've just met Richard Carleton, Chief Executive of the Canadian Securities Exchange. Now, it's a very, very interesting, though. I mean, it's fabulous. There was actually a question I was going to ask you, Richard, which was, well, you say you're at 800 listings now. When are you going to get to 1,000? I think you answered that question by telling us about how many opportunities that you're purviewing out there. It's very interesting also unpacking the discussion about agriculture. And certainly one of the things I find remarkable is you're talking about sensing technologies, all of those sorts of things. You look at John Deere, I mean, truly the most agricultural of agricultural equipment makers. And you look at now how they've got these incredible black box systems, which are actually based on the same ways that 20 years ago, NATO were using them in order to bomb people with precision guided missiles so that you can manage to get the most yield out of your farm. And I think it's incredible, the idea that you can actually automate your tractors to farm all night long if you so need them to, which is another fascinating issue. But obviously, we need that wheat right now, particularly if you're looking to be, well, those people who are to the south of the breadbasket of Europe right at this point in time, which isn't looking towards a bumper harvest. Chris Messina, great question from him. Thank you very much. As an American who sits on a Canadian board, I sing the praises of the Canadian regulatory structure. My private venture based in Greenland is offering a real assets NFT, so I'm glad the CSE is smart. Well, there you go. Praise indeed from Chris Messina in Florida, somewhere between the two of us. And to Peter Secon, his final question out of a batch he's had so far. Thank you very much, Peter. The Canadian Securities Exchange had its best year ever in 2021. What does 2022 look like, and how do you make the business grow even further, Richard?
Well, I guess there are a couple of things, and we've really been talking about this, for most of the last hour, Patrick, and that is, again, building that reputation with the influencers and in particular with the investors as being a place that is friendly to the issuer community, is easy to work with, problem solving, and so on and so forth. And it really has built on itself. So our word of mouth, our referrals, many entrepreneurs, of course, don't just have a single project underway. They've got more than one, so that if we give them a good experience with their first listed company on the CSE, the likelihood is overpoweringly that they will come back for the next 2, 3, 4, or 5 projects. The outlook for 2022 is interesting. We had an absolute explosion of, in particular, retail trading during Q1 in 2021. Something like 4 to 5 times what we experienced in Q1 2022. So from that perspective, the trading is certainly down, and that's to be expected in the junior markets, especially when you've got a higher interest rate, and there's certainly significant downdraft pressures in the large cap market, which again never bodes well for turnover activity. But I have mentioned that we are going to, I think, significantly exceed last year's records for new listed companies. We're very, very busy. We have a very large pipeline, and it's from many, many different sectors. So that is, of course, incredibly positive for the organization as we move through the year 2022. So there's that. But again, to also recognize, Peter, and thanks for the question, that we are also subject to the tides too, and so things are very positive for public company investment at this point, and that will help us go up. But of course, inevitably, there will be times when things aren't quite so robust, and that's sort of part of the joy of working in a public securities market. We can be really smart, do all the right things, but it doesn't necessarily have that immediate impact in terms of the overall business performance. But I like where we are right now, and 2022 is certainly shaping up to be an excellent year.
That's marvelous news. Marvelous to hear altogether. Thank you very much to Paul Bowes. Paul Bowes is noting, I joined a call on cannabis as a financial asset and have learned about blockchain, agricultural technology, and supply chain mitigation investment opportunities. Loving it. Well, there you go, Paul. Thank you very much. I'm delighted you could join the show and learn about so many things. It's certainly fascinating talking all about the cannabis opportunity and much, much more here with Richard Carleton from the CSE. I just want to go back to one thing, Richard, you were talking about earlier. You've talked a lot about the cost of capital and trying to make that as low as possible for your issuers and therefore helping them invest in their businesses. What sort of ways do you actually achieve that?
Well, the first benchmark we had to hit was equivalence with the established provider of public venture capital in Canada. I guess it's bad form to mention your competitors by name, I guess, but roughly an all-in, early stage companies will pay about 14% on an equity issuance, which seems like a lot, but of course it's a risky space, and so we do benchmark ourselves and see that we have in fact achieved equivalence, and in fact slightly better than that. And Patrick, it really is a function of all of the things that we've talked about. There has to be liquidity. So investors need to be able to trade the stock, not just from Canada, but from the US, from the UK and Germany and other places that are interested in Canadian early stage companies. We need to have as little risk associated with the trading systems. They've got to be absolutely rock solid. The provision of liquidity from whether it's market making firms or participation rates from retail and institutional investors, all of that has to be there. There has to be a good reputation from the exchange, that there has to be no indication that the exchange is slipping up in terms of its gatekeeper opportunities. Now, we have a way to go before we achieve equivalence with the other big guy operating in Canada, and that's as much a feature of the kinds of companies that list on them as opposed to on us. But we have applied, and we are shortly, or we've provided the final rules to our regulators to create a senior tier, and we expect within the not too distant future we'll have a tier of about 100 companies which are regulated as senior issuers in Canada. which has a number of things, both additional regulatory compliance obligations for the companies, but also a lot of benefits associated with that status as well.
Well, we're looking forward to that with great excitement when you get your senior tier all together, Richard. That sounds like a most interesting thing. And just remind us, does that have to go to your federal regulator, or do you have to actually put that through all of the different state regulators as well in Canada?
Well, we don't actually have a federal regulator in Canada. We have 13 provincial and territorial regulators. Now, again, I talked about, Canada, we're very comfortable with this whole federal-provincial tension. We actually have 2 principal regulators, which is a classic Canadian oxymoron. But the BC Securities Commission and the Ontario Securities Commission are our principal regulators. So we are working with them on this project to create the senior tier and to basically update our rules for issuer companies on the CSE Classic.
That sounds like quite a challenge when you're trying to get around all of those regulators. But obviously, as you say, certain of them have more influence than others, I suppose, in the overall federal mix. Not wishing to do anything or rain on the parade of some of the smaller states, clearly. But nonetheless, if you're looking forward from here, Richard, you've had an incredible run, spectacular amounts of retail interest, 800 listings. You've got a huge series of other sectors that are coming forward. Well, tell us, where do you think the capital market revolution goes next?
Well, I think that one of the things that I would like to see is closer working relationships with some of our peer exchanges around the world. It would be great if we could facilitate, as I say, more direct trading from the Germanosphere, from South Asia, from Australia. There's so many barriers at this point, not the least of which, of course, the time zone related. But as I say, I would really like to see the base of potential direct investors expanded quite dramatically through the use of technology, through interconnection arrangements with local brokers to international firms, as well, of course, the old clearing and settlement pipe works. Also has to be cleared up to reduce costs and to make it cost effective for people to be able to access those opportunities. We have a lot of interest from all of these places, and it can be a source of some frustration for investors and the companies to be able to access that pool of liquidity that we know is there, but we really still haven't managed to reach yet.
Well, on that fascinating note, this has been a whistle-stop tour from the Canadian Securities Exchange, talking about their move. Well, it seems to me that the move isn't merely from SMEs to Cannabis Power Player, but it's to a top-tier stock market. Indeed, one might argue, to infinity and beyond. Richard Carleton, it's been absolutely a joy talking to you today about so many things happening. I hope we'll be able to keep in touch and see you back here at some stage as the white heat of golf buggy technology takes place behind me. And we'll have the opportunity to talk more about how your exchange develops with its fabulous performance so far in terms of SMEs and developing these many, many interesting and exciting niches, as Paul Bowes noted, whether it's in agri-tech, whether it's in psychedelics, and of course also your blockchain platform, which looks superb altogether. Only remains for me to say thank you very much to all of our participants who asked questions and commented this week. Thank you, Christopher Messina, Les Calvert, Peter Second. Thank you, Peter, for your many questions. I think when it comes to influencers, certainly there's a possibility that you may be on the transfer market and given a very high value in the near future for the financial market and SME stock market influencer possibility. As well as that, Simon Huckle, Marcus Ward, Paul Bowes, thank you for your questions and comments, Paul, and Tomasz Kovacic. Next week, we're going to have Tom McMahon. He's going to be talking about energizing new markets, and that's going to be coming actually in 2 weeks' time, because next week, in sympathy with Pan-European Day of Indolence on May the 1st, we've actually got a week off, ladies and gentlemen, for once, and we're going to try and enjoy the Caribbean sunshine for at least a day or two. My name is Patrick L. Young. I look forward to you joining us again in this fascinating cornucopia of discussions. Thank you very much once again, Richard Carleton. I wish you all, ladies and gentlemen, a great week in blockchain, life and markets.